Okay, welcome to a new video. This is going to be a little different because this week has just been a little bit nuts. The last couple of weeks have been really volatile. A lot of money has been shifting from tech and medical and bio into value stocks. It's just been kind of unexpected. Just to quickly hit on the bond yields, which obviously made the markets start spiking, has just been absurd and a little bit oversold in my opinion. And just by looking at the SPY and the VIX, let's just start. For example, I'm going to put up a screen grab here that I took from StockTwits or from Inside Finance. This will show you that the SPY is still slightly bearish as we're coming into this next week. There's quite a bit more puts than calls. And there's also the VIX is actually bullish. Therefore, it's still going to be a little bit volatile according to other people's decisions. I personally think it's 50-50. We've went through 2 weeks of this madness. Let's just take a quick peek here at the overall SPY. This is the overall S&P 500. As you can see, we've been through some roller coasters here. This is the daily chart. We've had some huge sell-offs here this past week, and we had a couple of big ones a week ago. And most of us, including me, are getting hit hard, especially in the growth space, in the medical and biotech space. Basically anything that has a lot of future potential is just overvalued, and being overvalued is getting hit really hard because people are taking profits from that and going into value stocks. I'm a huge believer of Kathy from ARK Invest. She actually said that she thinks that this is temporary, and this will kind of trickle right back into these stocks as time progresses. Value stocks are great. Even some people said that they've actually taken profits because even though they're bullish on, for example, Tesla, like Barron said, they're bullish on Tesla. It's a $2,000 stock here in the next 5 to 10 years, but they took profits because they were up 400%. And a lot of people are doing that with a lot of these stocks. And I think that we're getting a little bit of a rotation here. Some people are getting hit really hard. I want to go over my list, my watch list here. This will go over some of the stocks that I'm watching and that I currently own and that I've been buying dips and will continue to buy in some of these dips. In terms of time frame, I've actually not timed it perfectly. I've been buying dips this past week. I thought that the stock market was actually a little oversold in comparison to how we're doing as an economy. With the yield spike, I understand a little bit of a sell-off here. I just didn't think it would be this bad and this long. So now that we're here, looking at the projections and reading everything online, this could be another week of this, and it could start rallying. As of this Friday, we had a huge rally here, and you can see. So look at the hourly for this last Friday here. I mean, we literally started just absolutely nose bombing, and then we recovered really nicely at the end of the day, actually in the green. So this is a good sign for a rally starting Monday, and the stimulus package was actually passed this weekend on Saturday, which is another good leg to stand on for a rally this coming week. It's really hard to say if it will last. It may just be kind of a bull trap, as they call it. So basically we may have where it goes up extremely high on the day and then a huge sell-off and a couple more days of a sell-off. I think by this next coming weekend we should be done with this madness, but I wouldn't quite put all my eggs in the basket yet to believe that it's over. Now I'm hopeful that it is over. I'm hopeful that we'll start seeing some green days this coming week ahead. Either way, let me give you some stocks that I'm looking at that I consider really undervalued right now. So let's go back to our watch list here. I do have a couple different watch lists here. I'm going to hit on a couple. Let's start with the obvious, the EV sector. We have been hit hard in this space. Tesla, for example, 30-40% off from its all-time highs. Unbelievable. This is the weekly chart here. It's obviously everyone knows that it's been rallying pretty strong, pretty hard. It got all the way up to $900 a share, and now it got down to $540 a share. So absolutely insane what Tesla has done. This is a great stock, especially long term. Now, will it go any lower? We don't know. I just know that if you're looking for long-term positions in Tesla, keep your eye on this one. NIO's another one. It has a very similar chart to Tesla. This is a Chinese EV maker. These guys have been absolutely on fire since they started really picking up in 2020. And you can see here they hit a high of $66, almost $67, and they've sold off and are down to $38. So we're talking 40% discount here from all-time highs. JP Morgan and some other banks have a price target on this stock by the end of the year between $70 to $100 a share. So I think this is going to be a big winner long term and a good one to get into in these price ranges. It could go lower, but based on charts, I've seen some people say that it could go $31, $32, $33 a share. I don't know if you want to chase the bottom. I can tell you that $36 to $38 is an awesome awesome entry price. I don't know if we're going to see this week. It may rally and it may go over 40 and hopefully stay there, and from there we'll go further and higher. I know they had a chip shortage. That was one thing that really didn't help, and then obviously this huge sell-off. Next, let's talk Churchill Capital. This is CCIV. This is a SPAC that's merging with Lucid Motors. Lucid, as they say, is going to be a huge competitor for Tesla. So the guy that started the Model S and working with Tesla is now at Lucid. This company is awesome, and their technology is a little more advanced from a motor perspective than Tesla, and they're going to give Tesla a run for their money. Now, they're not going to compete with Tesla because Tesla does solar. Tesla's talking robo-taxis. Tesla's just a monster on many fronts. But these guys will be a awesome EV company to own. They've had a huge sell-off recently. Let's look at the daily chart here. So obviously they had this huge run-up because of the news that the merger's happening. After the news broke, just like all SPACs, there was a huge sell-off, and it continued these last couple of weeks as it has been really volatile. And the stock got all the way down to the low 20s. My buy zone for this stock was $23 to $25. It got to 22 and some change, 21 and some change, which was awesome. It still sits in a good position, I think, for long term. Now, they're not merging until Q2 or Q3 this year, so they're not making cars yet, so it may be a little while before you see this stock go much higher, but these are really good prices to get into this stock. This is a good one to keep an eye on. XPeng and Li, these are two Chinese EV automakers. Again, these are also really amazing companies that also have a lot of potential. They already have cars on the road. They are competitors of NIO in China. They actually have very similar charts you can follow on the as you can see, the sell-off has been absolutely horrid for all of them. XPeng had $60 a share back in the 25th of January, and is currently sitting right around $28 a share, I believe, $29 a share. Absolutely cheap. This is half price. This company is awesome. Same thing with Li Auto, went up to $37 a share about the same time, January 20th, currently sitting at $22 and some change. This is just a great deal. So these are some good ones to keep an eye on. These are Chinese. I will say China is the #1 market for EVs by far. They may continue to be the #1 and will stay at the top of the Chinese, or will stay at the top of the industry of EVs. I think China is a huge potential for growth. So I would definitely invest in the EV space in China, between especially those three. And then Baidu's another one. They're just getting into EVs, but these guys are 100% EV car companies. NIO's my favorite because they have the patented battery swap technology. You just pull into the bay, the battery gets swapped underneath the car, 3 to 5 minutes, you pull out. That's why I originally invested in NIO back about 2 years ago. And NIO is just an awesome one that has been growing exponentially. So those are some to look at. Another one is Fisker. These guys have had a huge run up. Fisker just announced that they're going to have their cars made through Foxconn. That's great. They are a good one to follow. Everyone's been loving them. Although I don't know, they had a huge run up all the way to $32 from $15 just in a couple of weeks, and they've sold off a little bit, so they're around the low 20s now. Not a bad company to look at, especially for long term. Same with QuantumScape. This company is just nuts. If you guys followed this SPAC that went live, that merged, this went up to $132 a share. Now it's down to $44 a share. This is great because this is a solid state battery company. They're probably one of a kind here for the marketplace. They're definitely one to track long term. The only downside to this company is they will not have any products until 2024. NIO is going solid state, I believe, next year, by the end of next year, with their new sedan, and a little bit faster than QuantumScape here. But QuantumScape does not make cars; they just make the battery technology for cars. So a lot of different companies will be purchasing or licensing or doing a lot of business with this company. So this is a good one to track, and this is a great price, or getting to be a really good price to get back in for this for long term. So I'm just going to skip through a couple of these: AYRO, RIDE, FRSX, EasyGo. Highland actually has some potential, but not for a while. They won't be doing anything until the beginning of next year. They're basically doing a semi that will hopefully hit the streets Q1 or Q2 of next year. So they're going to be kind of trading pretty cheaply for the next quarter or two, but this is super cheap. I mean, we're talking $14 a share on a company that, let's take a look here. When they first merged from their SPAC, these guys were $58 a share on the hype, so we're down to $14. So we've got potential to get back there, especially Q3, Q4 of this year. I'm seeing this maybe get back there, as long as they don't pull a Nikola stunt and BS their way to sell their products that they're not really making. So let's just hope that this is a credible, legitimate company. Plug Power, Plug and Blink, these things are monsters. Plug and Blink have been on fire. Let's take a look at the weekly chart. So, I mean, look at this. This is just a freaking, this cliff. Plug just exploded from last year to this year to where it is now. I mean, you're literally at $75 a share on the 29th of January. Then you're down to like $32 to $33, $34 a share. This is half price almost, and Blink is kind of in the same position. These are great stocks when it comes to charging electric cars. The other one I want to talk about is CHPT. So this one I just did a video on for my weekly stock roulette series that I launched earlier today. This is the biggest EV charging company around, period. They are the biggest. They have a market in America and they have a market in Europe. And they were a SPAC that went public, emerged. And this was basically when the news broke, which was last year. They merged a week ago, and after the merger, they sold off. So they were $50 a share. They're currently at 26, somewhere around 26 bucks a share now. They were almost at $21, $22 a share this past Friday. This company here is huge potential. So just to quickly hit on why I'm staying so long on EVs, as Kathy Wood said, and she's not the only person that says this. Think about it, EVs are 3 to 5% of the market share currently. The EVs are going to be about 40% of the market share by 2030. This is just numbers and speculation, but that's 40 to 50 to 70% year-over-year growth in this space. If we do grow in the EV sector, EVs are what you really want to invest in. They had a huge pullback between 30 to 40% from their all-time highs. These may be good times to get into these for long term, especially these charging companies like Plug, Blink, ChargePoint, and maybe EasyGo is another one to look at. EasyGo is a much smaller one, but they're kind of innovative and unique. So I would definitely keep your eyes peeled on this guy. And another is SNPR. These guys are unique because I think they advertise with screens on their chargers. They're still pretty small, and I believe they're still a SPAC. So just something to keep an eye on. I mean, this is SPAC price, $11 a share. This is, I mean, SPACs are $10 a share when you start, and from there you basically, you don't really lose money. They don't go much lower. Barely, if any, some ever do, like Clover, for example, but that's another topic for another day. So moving on, let's just kind of hit on NGA is also another good one, Northern Genesis. So moving into the crypto space, because this is kind of highly talked about recently as well. Bitcoin's obviously on fire. As of this evening, we're sitting there around 51,000 again. So Bitcoin, Ethereum, they're doing all right. Ethereum's pushing 1,700 again. This is awesome. So going into the week, we may see somewhat of a rally in some of these. My favorite has been RIOT. I've been a fan of RIOT since they were, let's see, $31 a share in 2017, and I have been averaging down from mid-20s down to $2, $3. My average is around 5 or 6 because I bought a ton of RIOT and it was $3 to $4 a share. And I'm glad I did, because RIOT right now is sitting around 40 bucks a share. Some people have price targets on this company to be closer to 100 by the end of the year. It got up to $79 a share here. If you're looking at 219 this year, that's nuts. This company has potential. They're probably the biggest one to follow in the crypto space when it comes to any kind of stocks that are related to crypto outside of actual crypto. So good one there to follow. Mara would probably be the other one, I would say, next to RIOT. This company also got up to 50 bucks a share on the 19th of February, and sitting down around 30 bucks a share is pretty good price. Mara is another one to follow, and then there's a few smaller ones you want to keep an eye on. DPW, XNet, these are still pretty cheap and considered penny stocks. SOS has been really controversial. I personally am a fan. I've been getting in SOS since it was $3 a share. It got up to $15.88 back on the 19th and has really crashed hard on this huge bear report that we had from Heidenberg, and they basically said they're a fraudulent company. They crashed and burned to like $5 a share. And from there, I just loaded up because I just believed that no matter what, we were going to get to 9 or 10. And then we rallied a little bit. So we're kind of sitting around $6, $7. And I think this stock is a $10 stock all day long in the next week or two, just depending on whatever this choppy market kind of does. But this is why, it's still a cheap, fairly new company. They don't just do mining. They just started mining. They have 5,000 rigs. They also do software services with blockchain. So I have a video on SOS that I did. I'll link below that will tell you actually more about the company. They are a Chinese company. Same with eBond. This is another one that is tied to crypto. This is one to also follow. I think they're $6 a share right now. So do some research on this one. This is one I just got into recently. They're also a Chinese company that is tied to crypto. And going further, BTBT, FT, are a couple other good ones to track and follow that can have connections to digital wallets and potentially crypto as well. So these are good ones to keep an eye on. And BFT is a SPAC from Build Fully that is going to be merging with PaySafe pretty soon here. That's a good one to track. And man, is this a good deal for this one, because this, I mean, it's still a SPAC, so you're going to see it going through the roller coaster of the way the pricing works. But this is, PaySafe is a good company, and this is going to be a $30, $40 stock by the end of the year, is just a guess. And of course, I'm not a financial advisor, but I just thought I'd throw that out there. Fund PHUN. This is a speculative stock. This is literally a penny stock. This is, let's see, these guys were $3.38 at their high on the 12th of February. Came all the way down on the 5th here at $1.15, I think. Yeah, somewhere in the $1.15 mark. This is like half price. This is a company that does software and lots of mobile-related business, mobile-related software for business. They got into FunCoin and FunWallet recently, and I think they may have some potential, maybe some growth. I mean, it's a good one to gamble for a few bucks because it's so cheap. But I don't know if it'll be a $100 stock like Riot or Mara. They actually mine crypto. This company does not, but it will use it. So this company may be a $10 stock in a few months, maybe. So one to keep an eye on. So getting out of the crypto space, another space that has just been hammered and just been hurting me inside because I have a lot of money in this space and I really see a lot of potential. Let's talk about CRISPR. CRISPR started a lot of gene editing back in, I think it was 2009. Got very expensive to genetically edit, and a lot of these businesses that started, let's look at BNGO, which is my favorite. Let's look at the monthly chart. So look at BNGO, for example. A lot of these companies come out, well, they actually IPO'd in 2018, but a lot of these companies IPO much higher because of all the potential in this space. But because of the cost and time, a lot of big money leaves these companies because they're not creating the revenues and the profits that they should be at. And until recently, they innovate and they create, and things have gotten a lot cheaper in the technology world, which has allowed the medical world to shine. And the market cap for these things are huge, and the potential is massive. So BNGO is my favorite medical space stock. It is they make a machine called a Cypher. It actually is a product that detects a lot of variants within the medical industry with cancer and a few other things. And actually, it's very interesting because it does a more efficient job than some of the big boy stocks out there right now. It's just getting started. They're just getting these machines out there. The revenues are pretty small, and the hype of this stock, because in my opinion, this has a lot of potential to innovate in the medical space. As you can see, it hit a high of $15.69 February 26th. It's had a huge sell-off since then. Again, their numbers are not very appealing. A lot of the money has left the hype stocks and has went to the value stocks. This stock at $6 a share, in my opinion, is a great value. I don't know if they're going to be flying high anytime soon, but I think this year, I personally think $30 to $50 a share by the end of the year, hopefully, if all goes well. So this is a very high prediction, but hey, this is a long-term play here. Look at what CRISPR did. They freaking went nuts. Next one I really am a big fan of is SENS. This is a diabetes company. Their competitor is Dexcom. Dexcom is a massive diabetes company. SENS does a under-the-arm sensor that basically is wireless, and you can track your glucose on your iPhone. They have a 180-day, and they're working on a 365-day. It is not FDA approved in the United States. It is in Europe, and once it gets approved in the United States, they will have a lot more sales, and this company will blow up. I got into SENS in January when it was like $1, right? I think this first spike right here is what caught my attention, and then I got in somewhere around here. It was like $1.20 a share, $1.30 a share, and I just been riding the wave since. I can't say for sure my predictions for this one, but I do believe, I mean, we have 550 on this one right here back in February. I do believe that this stock is going to get back to that $5 mark in about a month and a half, and it had this huge sell-off because, again, the numbers aren't as appealing to some as they could be, and what really killed it is that the FDA approval was pushed another quarter or two than what they originally pushed it from, which was supposed to be last year. Now it's supposed to be Q2. Now they're talking late Q3, Q4 this year for the 180-day. And then there's the 365-day that they're still working on. So this company has a lot of potential. I see this as at least a $5 stock by this summer, no problem, and maybe even a $10 stock by the end of the year. So, and maybe even a $10 stock by the end of the summer. So well, I don't know. We'll see. We'll wait to see what happens as time progresses here. But I really do believe in this stock has huge potential. Kind of some of the other ones that I'm a big fan of. These are all the stocks that I currently have in my portfolio. CLOV is one I really want to hit on. HIMS and CLOV. These two have already converted in from SPACs and merged. HIMS is definitely a good one. Well, it's been really oversold, and this has a lot of long-term potential. CLOV got hammered. Let's look at their weekly chart here. This thing has been shorted and got all the way up to $17 a share beginning of January, and since has just been getting clobbered. It's like $7 a share. This stock is a $12 to $15 stock all day long. Once they get their, once they don't have any bad reports or press about them, they're going to get back there. I think this is a medical stock. This is a good one to follow. There's not a lot of downside potential at this point, I think, at the $7 range. This is a good one to get into, especially for long term. Another one that's been getting just annihilated here just the last couple of days, TTOO. They had earnings. I didn't think they were that bad, but apparently everyone else did, and they went from the $3. I think it hit $3.79 right before the earnings, and plummeted to half of that, $1.50, $1.60. And these guys have a couple different products in their pipeline. I did a video on them and their pipeline. I'll link below. I think they have some huge potential. They're still in the phase trials 2 and 3 in some of their pipeline, but I think this stock is a $3 stock all day long. So I think once this oversold sale passes from this volatility, we'll be back to the $3-4 range in no time this month. That's just my personal opinion. Another one's ACRX, kind of the same boat. Some of these companies have so much potential, but man, they've just been oversold. A couple ones that I've been kind of following for a while. Check. This is a neat one. ZOM is the people's choice stock. This is the pet space. They make a product that can detect some variants where you don't have to send your blood samples out from your pets, so they can give you the results right then and there. This kind of started working heavily here in December, 25 cents a share, all the way up to $2.90. That's kind of come down since. ZOM is actually a $3 stock by the end of March, almost as a no-brainer, because they have a product they're coming out with called the True Forma. Comes out March 30th. These guys don't have any revenue, zero. They also don't have any debt on the books, I don't think. I think they got some cash on the balance sheet. They did they raised capital recently here. But these guys are, once the True Forma hits March 30th, this is going to be a $3 stock. No brainer that it gets right back to there, which is double from where it sits right now. This is definitely a good, especially a quick swing trade if you don't want to keep it. This is definitely a good one to keep an eye on. OCGN, these guys have went through a roller coaster on COVID news. They hit $18 a share on the 12th of February, back down to $8 a share now. Basically half price. I think they're getting a little bit of press on this because of COVID overseas. I think this is a $10, $12 stock right now. It's been oversold a little bit, but maybe we'll start seeing, some people are calling this a $50 stock by the end of the year. So it's definitely a good one to follow as well. A couple of quick ones that I would say have some huge potential. ACTC is a good one to follow. GIGX is a good one to follow. I mean, look at this. It's just been so oversold. $4.47 just on the 8th of January, all the way down to $1.50 a share. It's more than freaking 60-70% off almost. This is a potential stock that if you have some patience, you can make some pretty good money, especially get back to the $4 range within the next month or two. And they're also a pretty good company. So a couple other similar, CGIX. This guy, this is a cancer innovator here, $17.50 a share on the 12th of February, right back down to $5 or $6. They had that huge spike. They will retest that, I think, by this spring, in my personal opinion. So this is another good one to follow. A couple of penny stocks that are speculative, but I think you should add to your watch list. NDRA, then you've got VGR, PTE. Some of these other ones are decent. COCP, BIOL, IBIO. Another one I think you guys should keep on your radar, but this is maybe a longer term, VGAC. This is a SPAC with Richard Branson that will be merging and doing a deal with we'll be doing a deal with 23andMe, which has more data than anybody else when it comes to DNA sampling and DNA. They have over 10 million people's DNA data. And remember, data is king. Tesla's the king of the road. Google's the king of the internet data. Facebook is coming in pretty hot too, and so is Apple. So these guys are the DNA king. And when it comes to genetics, this is our future. This will fix a lot of our diseases, and they have a lot of information on us already. Now, their books don't look very good. They're actually losing revenue year over year. The last couple of years, they even laid people off last year because of COVID. So they're not looking too hot right at the moment, but they are partnered with another company that have a lot of products in the pipeline. So just looking at their weekly, they're going to hit pretty hard. And they recently announced the merger with Richard Branson's SPAC, so you can see it got up to $18 a share, started plummeting, and of course continuing to plummet because nobody wants their money to sit in companies that don't have good numbers, especially when in a sell-off in overvalued stocks. So we're back down to $10 a share. That's the freaking price of the SPAC. So you really don't have much downside buying into this in long term. But they're not merging until, I believe, June or July is the projected time frame. So you may want to wait a little bit until a huge amount of money on this one. But for long-term positions, this is a great buy. I'm just going to kind of quickly hit on these because I'm going really freaking fast, really slow. Energy space, there's a lot in the energy space. I'll tell you just quickly. IDEX, this is an innovator. GEVO, this is an innovator. These are penny, well, they're a little out of penny stock territory. Well, they're back to penny stock territory. GEVO is $7. What is it? GEVO is $7 a share, was 15. These guys are the person on Joe Biden's science team was one of the co-founders of GEVO. This company makes fuel that's more green and more efficient. We can literally transition into using their fuel right now in our planes in some of the places. They have some huge accounts lined up, and I think they're going to be a big innovator for transitioning into the green space, into the EV space. We can't have planes today use batteries yet, so this is going to be a good transition stock. IDEX is another innovator as well. They're still a penny stock. I mean, they were $5 a share just a month ago, $2.80 now. This is a great price. Some of the other ones I'll tell you to keep an eye on really. BEOPTT, MVIS. MVIS is my favorite stock, although it's pretty expensive, but this is the stock I started with. This is one of the biggest energy stocks out there to have long term, and priced in at $143. This is a pretty good price, and it was $229 before we had this huge sell-off. This is a great price. A couple other ones, Pola, SunW, also getting hammered, equally getting hammered. Good stocks for long term. Same with JKS, Run, RMO. RMO has been one of the biggest hit energy stocks, I think. These guys were $38 a share on December 31st, sitting at $9 a share right now. Literally 70% off from a month and a half ago, 2 months. This company, I think, has some long-term potential. I would give it 5 or 6 months before you see that turn right back around and maybe get closer to that $20, $30 a share by this summer, maybe. Who knows? But they're one getting shorted heavily. Another couple of good ones, OEG, FCEL, CBAT, SPI, URG, all really good ones in the energy space. Let's go to the MJ sector. MJ, you can't talk about MJ without talking about Sundial. Sundial has been the funnest stock, the most fun stock. IPO'd at $13 a share in 2019 and a roller coaster ride down until it just became a penny stock until recently, becoming a short favorite in Reddit community. This puppy climbed then. $3.96 has been sold off since then, back to $1.13. It's a pretty good entry price for this stock because they don't have a lot of debt on the books. So this is a good one for a long-term hold. Definitely one to keep an eye on, especially if you want to get into a stock that's a cheap one. Another one would be an OGI. So OGI is also pretty cheap at this $268 price. It was $6.45. Same thing, they had that huge squeeze about the same time. Some of the bigger players, CGC, this is one of the biggest out there, Canopy Growth. Same with ACB, Aurora Cannabis. I'm not as thrilled on their performance as I am CGC and Chronos. I would say those are a little bit better for long term. And let's not forget APHA and Tilray. When they merge, they are going to be a monster. So definitely, I mean, APHA at $15 a share is a good price for long term. Wait till they legalize marijuana across the board. These are good stocks to hold. If you don't want to buy individual stocks, I'd say you can buy like YOLO, THCX, or MJ. These are ETFs in the marijuana sector, and I believe MJ and THCX will pay you a dividend. And these are good stocks to hold. If you don't want to mess with individuals, you just want an ETF to throw your money in, let them manage what stocks are in there. Those are good options to go. So moving in to rare earth minerals, I only threw a couple in there. MP is the biggest one in this space. I don't have that one on this short list. That's on one of my long positions. DNN and CHNR, this is a Chinese mineral company. These are penny stocks. They may have some potential long term, but these are ones I just threw a couple $100 in. I'm just letting it ride and seeing what it does in a couple of years. I'm not day trading them. So moving on further into the tech space, I'm going to be quick and brief here because I could spend a long time here, and I just have a few to talk about. If you just want to put your money into something long-term, Apple's the way to go, especially at 120 bucks. I'm telling you, they're not pricing in Apple for their credit card. They're not pricing in Apple for their subscription models and some of their arcades recently. The 5G play, the car play that they're getting into, cars, these things aren't priced into this price yet. Apple will continue to prevail and rock and roll. Long term, Apple is going to be a monster no matter what the stock market does. But on these dips, it's a good time to buy it. 120 bucks a share, it's a good price for Apple. Going further into some of the less speculative, more speculative ones, GNUS, this is kind of like a mini Netflix. These guys had some huge potential when they first came out and had this hype back in June. They got 11 bucks a share back then, and back to a penny stock they went. This is a TV subscription service with a lot of different movies and shows. This is a $5 stock in a couple of months, just my opinion. I think it's a good one to have and to hold for a little while and see how it does. It's been getting a little bit of traction lately. So moving in a little further, Pinterest. Oh, Pinterest is awesome. Pinterest is a good one that I actually didn't believe would have this much potential when it first came out with the advertising on the platform. They have been a monster, and at 68 bucks a share, this is a $120 stock in a year and a half. Just my opinion. Pinterest is a freaking monster. One to own for long term. A couple other ones I want to talk about. Sonos has been on fire, and I don't quite know why they weren't hammered as much lately as the rest of the stocks were. But this is a good long-term stock. Just buy it, hold it, let it hold. They make speakers. They're one of the best speaker companies out there. Fubu's freaking awesome, and they just recently got into gambling on their platform as well, I believe, on their TV platform. Fubu is very similar to a mini Netflix, and they're a good one to have long-term. They've had this recent run-up, $62 a share, and now they're half of that price a month later. So again, Fubu is another one that was a little popular on the short list and will be a really good one for long term. I see this as a back in the 60s by this summer probably. That's just my personal opinion. Palantir is a data master. They have the most contracts with the government, which if you work with the government, you're probably going to be around for a while and they're going to take care of you. And as I'm assuming they do, if you look at their revenues, year-over-year growth has just been phenomenal. Palantir is a data master. I did a video on them. I'll link it below. I think this is one of the most undervalued stocks right now at $23 a share. It hit $45 a share here recently, about a month ago. This stock, I think, will retest that 45, no problem within the next month or two. I see this as a $100 stock by the end of the year, no brainer. This is just, I'm bullish in Palantir, sorry. GILT and GSAT are two great companies if you want to look into satellite plays. They're still pretty inexpensive, especially GSAT. This hit $2.98, oversold to $1.40. These are good companies for long term. MVIS, this is one that people thought maybe Apple might partner with. I did a video on them. I'll link that one below as well. This is a LiDAR company as well as chips, AR, VR, anything to do with future. They make it. They make hardware. And this company here was $24 a share when the news broke that Apple may be looking at purchasing them for the LiDAR technology. This was on February 19th. Has since come way down into the $10, $12 range. So this stock has some potential, especially if they're going to be bought out because they have a good line of products. But they've come up in price pretty fast. So maybe be wary of this one. I mean, these guys were back in December. They were $2 a share. Hit 24 in 2 months. So heavy run-ups. You got to be careful on these that have these huge run-ups because they get oversold in times like these when these markets are volatile. But once we get back to more of a steady market, this one will definitely be one to keep on the radar. UVIS, this is a drone company that plots and maps commercial for agriculture. These guys were a penny stock not that long ago and had this huge run up to 17 bucks and back down to $5-6 bucks. This may be a good one long term. They had a short report recently hit that killed them, and then the sell-off happened. So this could definitely be undervalued for long-term stock as well. So just a couple of quick ones. Uber, Lyft, these are no-brainers for long-term. I'm surprised actually Uber got a little bit more hammered here this last sell-off than Lyft, just because Uber actually has Uber Eats as well, but they're both really good ones long-term. CTRM is another favorite from the Reddit crowd. CTRM is a freight company. Basically, they have ships for freight services. This is a penny stock still, got up to almost $2 a share, oversold back in the 80 cents range. This is a good one long term, especially if you just want to buy a few shares cheaply, buy it and forget it. JMIA, this is the Amazon of Africa. This company is freaking bomb.com. Got to $7 a share on the 12th, came all the way back to $37 a share. This is so undervalued right now. I think we're going to retest that $70 in the next 3 or 4 months, no problem. This company is one to hold for long term. This is a great company. Yeti, I love Yeti. I started buying it at like $20 a share. I'm like, yeah, I love Yeti. I use their coolers for partying all the time. And then their freaking numbers just kept on rocking. I mean, this thing's been pumping. Got up to $80 a share back in January. And man, was I impressed. I did not think this stock would do that well. It has also had a little bit of a sell-off here, but Yeti's a good long-term play. So let's talk about Open and Rocket. Rocket, RKT, and Open. These are real estate. So Open is a unique SPAC that merged, and this is a unique concept within the real estate space. Think of like Carvana for cars, but Open for real estate, where you can buy and sell your real estate right online with cutting out the middleman. They have the brokers lined up, they have the mortgage lenders lined up, they have it all under their umbrella. And this is kind of the future, especially for like your millennials and your crowds that are much younger than us old folks now. So this guy here was at $39 a share back on the 12th and dipped way down to $17, $18 oversold and heavily shorted. And this stock, even at the low 20s, is a great stock. This will get back to 40 within the next month or two, in my personal opinion. Good one for long term. FRX Beachbody, this is another good one to follow. This is back to the prices that it was when the SPAC was when the SPAC actually announced the merger with Beachbody. It's a good one for long term, just to throw a couple $100 in maybe and let it ride. And let's look at Nano Dimensions, another one of my favorites. I love them. I actually love them when ARK started buying them. I became obsessed with why, and I started looking into it. These guys make 3D printing chips. They have done, so every time you see this red candle, they did an offering. This pissed me off. I started buying them, they did an offering. I'm like, I gotta have more because there was an offering. Then when they ran up again and they did another offering, I'm like, oh man, I really believe in this company, I'm gonna buy more. Gotta buy more. They did all these freaking offerings. They have raised over $1.2 billion just on the books. So people are thinking there may be an acquisition coming, or there may be something huge coming with this company. ARK owns a lot of them, and I believe that they're heavily oversold. They were almost $18 a share on the 29th of January, back down to $7 a share. And I gotta say, this company by itself, this is like a $6 a share price just on the money they have sitting on their books. So this company, I believe, will test those highs in the next month or two, especially if they have anything in the works that they will come out with in the new. They were oversold because a lot of money went from these stocks into a lot of value stocks. This is a lot of hype that this was being sold on. So hype stocks were sold out. This is a good entry price. This is a good one for long term. I would really recommend this one as well. So this is just my quick take on some of these. Some of my favorites, as I mentioned, that are basically the most speculative for value right now are being heavily oversold. So definitely keep your eyes on them. This week will be a little choppy. It's hard to say what to expect, but I think we're coming close to this madness to end. I think we're way overinflated on the sale that we've had here. The economy's doing great. Numbers are coming in strong for a lot of the earnings, especially in the tech space, which is oversold. The tech, the biotech space, anything to do in the future growth stocks, EVs, these have been oversold, and I think we'll come back on some of these prices here in no time, in the next couple months, hopefully. I hope you guys enjoyed that video. This is a little different. This is just some things that I'd like to keep on the radar for this coming week. A lot of these are heavily oversold. Good ones to follow for long term. Hope you guys like this video. Like and subscribe to the channel. Write down in your comments below your thoughts on any of these, or if any other ones that are heavily oversold that I missed that I want to keep an eye on for this coming week. I'd love to know your guys' thoughts. Thanks again. I hope you guys subscribe to the channel for more.